Welcome to Conversations, Season 2 of the MTA Podcast Series, a weekly audiocast featuring interviews with leading investment strategists, geopolitical experts, and other key thought leaders, brought to you by the Market Technicians Association, and your host, Ed Carlson.
Daily momentum has cycled into overbought territory, and we believe the current advance is rather stretched to the upside from both a price and time basis. In addition, big rallies into an earnings season have been a prescription for disappointment many times. Remember mid-April? Tuesday, November 16th, 2010. This is Conversations, the official MTA podcast series, Season 2. And today's guest from S&P is Mark Arbeter. Mark Arbeter joined Standard & Poor's Market Scope in 1987. Mark became S&P's chief technical analyst in 1995 and is now S&P's chief technical strategist. He provides technical analysis on the stock market as well as many other markets to Market Scope, The Outlook, Advisor Insight, and many other services. Mark has been quoted by financial publications and outlets such as the Wall Street Journal, Investors Business Daily, Bloomberg, TheStreet.com, Fortune, Worth, and MarketWatch.com. He has appeared on CNBC, CNN, Bloomberg TV, Rob TV, TV Tokyo, and has done interviews for CBS Radio. Mark is a member of S&P's Investment Policy Committee, which sets investment allocation levels for many services. He also manages a stock portfolio, investment ideas, for Market Scope, applying technical analysis to S&P STARS recommendations. Mark is a member of the Sector Strategy Group, making recommendations for S&P's sector allocations. He is a chartered market technician and serves as the chairperson for the Market Technician Association's membership committee. Mark holds a Master in Business Administration from Rider University with concentrations in finance and economics. He received his bachelor's in Business Administration from Temple University, also with concentrations in finance and economics. Mark Arbeter, welcome to the program.
Thank you. Glad to be here.
Well, thank you for taking the time to join us, Mark. Mark, I'd like to start with some personal background, as we usually do. Can you tell us, take a couple minutes and tell us where you grew up, how you ended up at Temple and Rider, and then take us through the transition or the time period between there and your interest in technical analysis.
Sure, Ed. I grew up in a very, very small town of Furlong, Pennsylvania, way out in the country. Had 5 acres, beautiful country back then, getting a little built up now as everything on the East Coast is. But I took a real untraditional route to Wall Street. When I left high school, basically had no clue as to what I wanted to do. Started college at Penn State Ogonce in engineering. Lasted all of 4 days. Needless to say, my family and grandparents were very upset when I decided to quit school. Thought that the end for Mark was there.
Right.
But it turned out to be a very wonderful decision looking back. I then started to work at a company where my girlfriend worked, which happened to be a manufacturing company called Penn Engineering and Manufacturing in Danborough, Pennsylvania, and they just happened to be, luckily enough, a public company. So as I worked at Penn Engineering, I could see from the inside what a good company they were. So at a ripe age of about 18 years old, I started to buy their stock. Fortunately, I did very well over the 5 years that I worked there. So I saved up quite a bit of money for, a 20, 21-year-old with a stock portfolio at that particular time.
About when would that have been? What year roughly, or what years?
That was in the late 70s to early 80s.
Okay.
And I remember not only buying Penn Engineering stock, but that was a hot time for oil stocks. And I remember buying some Canadian oil stocks and having a broker at Merrill Lynch tell me one time that I was her, not her biggest client, but best client as far as stock picking. So that certainly helped my ego a bit, being so young.
Uh-huh.
So after about 4 or 5 years, the treasurer of the company came to me one day and kind of smacked me on the head and said, "What the hell are you doing here? You should go back to school full time. You're bright.
Huh?
You have an interest in the stock market. Go back to school full time. Get a degree in finance and or economics." So he kind of pushed me over the edge, and I started at Temple University in 1982, and I went straight through the summer each year and was able to finish my undergrad work in about 3 years, then proceeded on to Rider University, which is in Lawrenceville, New Jersey, not far from Princeton, but we won't confuse them with Princeton. So I finished my master's in about a year, and with a concentration in economics and finance, and then got a job at S&P. And
wow, just like that.
Yeah, well, it took me a little while. Fortunately, I was still at home.
Job doing what?
When I started at S&P, it's funny, I started in August of 1987, the exact week that the market had peaked out. So I started as sort of an economics editor. I would write stuff in conjunction with The Economist for Market Scope. I'd write some market commentaries and some bond commentaries. So I kind of got my feet wet and had, nice tutelage above me, mostly people from the fundamental side. But it kind of took off from there. And in 95, I was promoted. They did have a chief technical strategist, and they threw him out the door, and I was basically the only guy on the floor in equity research that looked at anything near what a chart was at the time. So in 95, I was made the technical analyst of S&P equity research, and my career, kind of kicked off about that point.
Okay. All right. This morning I was sitting at my breakfast table having my postie toasties with CNBC on TV, and I hear the opening bell, and lo and behold, who pops up on my screen? But it was you.
Yeah, it's pretty good timing, huh?
Yeah. Tell us a little bit about your typical day.
I write a weekly comment that comes out every Friday, so the week is sort of geared towards preparing what I'm going to write on Friday. I have many different tasks here at S&P. I'm a kind of a single-man shop here. I, look at many charts during the week. Try to determine what the major factors are that are moving the market, whether it's up or down. I have an investment ideas portfolio based on two things. One, the technicals of a particular stock or ETF, and if it's an individual stock, it has to be rated or ranked by Standard & Poor's Equity Research. So I spend some time looking at my investment idea portfolio and looking for new ideas. I also work under Sam Stovall, who is my boss, and he's in charge of sector allocation here at Standard & Poor's. So we spend probably some part of a day each week looking at which sectors we should overweight and underweight, and that's based on Sam's historical work and my technical work, and that goes into how the analysts are supposed to, overweight or underweight their particular sectors.
Okay.
I also write technical commentary on the Asian stock market as well as the European stock market. And I'll back up a little. In my technical comments each Friday, I do write about, other things other than the S&P 500. I look at the treasury bond market, I look at the commodities market, I look at the dollar, sometimes crude oil, what's ever exciting and in play here, I will talk about from a technician standpoint. That's one of the great things, I guess, about being a technician. You don't have to be an expert in currency markets or treasuries or anything like that, but as long as there's prices and you're able to chart things
Right.
Look at things, you can comment about it.
Yeah. Mark, I want to jump in right here. We're going to continue with Mark Arbeter in a moment, but first a reminder that on next week's program, we'll have from DecisionPoint.com, Carl Swinland. Now, Mark, the reason I interrupted you is because you were talking about something I wanted to get into a little bit during this discussion, and you were kind of wrapping up and moving away from it, and I didn't want to let you go there. We like to ask our guests about communication with the consumers of the research, and you have a unique situation where S&P, I don't know, I'm guessing, what do you suppose, hundreds of thousands of people worldwide are reading this material? Yeah. When I read your reports and you sent me a handful, there's no doubt you're a technician and that you know what you're doing. But my question as I was reading the report was, well, who reads this research? They can't all be technical analysts that are reading it. I mean, if they were, they wouldn't need to read it. How do you decide just how technical you can be with the non-technicians who are your readers?
Right. I try to, well, first off, the majority of my readership are retail brokers that get my information on Market Scope Advisor and Advisor Insight, which is, they get it right on their, computer screen along with, quote services and what have you. And that goes out, I don't have the exact number, but it's 80,000 or 100,000 brokers that this is disseminated to. We also have institutional clients, but that's a very, very small part of our business. But the majority is the retail broker. And knowing that, and there are a lot of sophisticated retail brokers out there that happen to be very good, call them closet technicians or whatever. They're very damn good. And, they know I don't have to dummy down any conversations when I'm talking to them. But when I write my technical commentary, I try to sort of take a middle of the road direction, so it's not too technical, and at the same time, explain how I'm doing things, why I do things, and so that they, hopefully that they can understand it. And I think, most of the time, the readers, the typical readers or the consistent readers, understand technician. I try to also be educational at the same time, try to be like a teacher. So I'm not only giving my forecasts on different markets, but also trying to teach, my consumer or my readership, what I'm trying to do and how this all fits in and how this all makes sense.
All right. Great. All right. Let's move on. I want to spend our last 6 minutes rummaging around in what we call the toolbox, where we talk about the different tools that you use. And I want to start by going back to that opening quote. Daily momentum is cycled into overbought territory, and we believe the current advance is rather stretched to the upside from both a price and time basis. Talk to us about how you measure on a time basis. What are you doing there?
Right, I'm looking for intermediate term market moves that have preceded the prior one. How long did they take? And you typically see each market have certain time cycles where their intermediate term advances or intermediate term declines can be defined within some type of cycle. Now, I'm not a cycle guy, but certainly when the market is up for 2 or 3 or 4 months, like we've seen, obviously from a stock market perspective, you know that the time is near, that this move is probably getting closer to the end than the beginning. And then that is confirmed with, some of the momentum indicators I look at and some of the sentiment indicators I look at. And then at this particular time, I thought it was very interesting that I think the stock market was topping out just as the dollar was bottoming out.
Yeah.
The dollar lately has been a big factor in my market forecast, and that turned out to be a pretty good call.
Yeah, right. Hey, listen, in your November 8th report, you write, quote, a measured move based on the width of the inverse head and shoulders pattern traced out over the summer targets the 1233 level. Now, you're talking about the width of a head and shoulders pattern. That sounds more like a point and figure measurement than bar charts. Where did you learn this method, and what can you tell me about it?
Basically, I look at patterns, inverse head and shoulders, double bottom patterns, and you look at, how large they are, as far as, in price. And then once an index or an individual stock breaks out, you just add the width of that particular reversal formation to the breakout point. And that gives you, a target. It's not the target, but it's,
Wait, I'm not following you. Can you give me an example? Just a real simple example.
Sure. Let me call up a chart of the S&P real quickly here. I think the S&P's, the width of the S&P 500's inverse head and shoulders was about, was it 100 points, 105 points?
What do you mean? The width is measured in time. I don't understand how you're doing this. In points.
Oh, I'm sorry. I guess the size of the base from bottom to top of the base, not
so you
necessarily
don't really mean
in
width.
time.
So you don't mean width. You mean?
Yeah, I mean size of the base. I'm sorry.
Okay. So it's just a standard head and shoulders measurement then.
That's correct.
Okay,
Yeah.
I'm sorry. All right, I misread that. All right. Here's another question that I had. You also wrote that the 14-day RSI at 79 was one of its most overbought readings in 14 years. Now, I watch this indicator every day and have noticed that. It is probably a problem with not seeing the forest for the trees. How do you go about keeping on top of such things? Do you just know that, or do you have a method for alerting you to such things?
You kind of learn that when certain indicators, you know what the extremes are for certain indicators in the back of your mind, and when the 14-day RSI got up near 80, I said to myself, boy, this seems like an extreme overbought level. And then I just looked back historically and, found that it was, one of the more overbought conditions. So you kind of have in your mind, what's normal and what's not normal.
Right. Okay. I got it. All right. We're literally down to our last minute. I'd like to ask you a question, Mark. Who would you say have been some of your greatest influences? Who's pointed the way for you in technical analysis? Also, can you recommend any books that you think are must reads for technicians? And finally, has the MTA played a role in your career?
Sure. I guess some of the books that I've like to read, certainly I like to read Murphy's books, the Edwards and McGee book, Pring's book, some of the technicians, I guess, that have made an impact on my life, certainly Luis Yamada, and some of the old-timers, like a Peter Eliades with his cycle work, the people at Merrill, the old-timers, I guess, at Merrill Lynch, and I'm not coming up with a name right now. I also really, really like the work that William O'Neill has done with Investors Business Daily. I think it's, if you're an individual investor or, a broker or whatever, you have to read IBD and learn, the techniques that Mr. O'Neill has perfected over the years.
Right. Mark, we're out of time, but gosh, it's been great having you with us today. Is there anything else you'd like to mention before we go?
Yeah, I think, the one thing that drew me to technical analysis, the very simple thing was that it's very difficult to predict the stock market. You leave your ego at the door every day you walk in, and if you are a fundamental analyst, I think you're even further behind the eight ball because the technicals almost always lead the fundamentals. So if you're a fundamental analyst, you better learn how to read charts.
Yeah, that's great. All right, thanks, Mark. Today's guest has been Mark Arbeter, and that wraps up this week's MTA podcast. From SeattleTechnicalAdvisors.com, I'm Ed Carlson, together with our recording engineer, Shane Squark in New York City. Say goodbye, Shane.
We'll see you next time, everybody.
All right, let's keep our stops tight. Good day.